So on Friday, the S&P rating agency downgraded the United States debt. What does that mean? We had a AAA rating. Now we've gone from a AAA to a AA plus. So in retrospect, do you want a AAA? Absolutely. But having a AA plus isn't all that bad. It has created more of a black eye to the United States. It has created uncertainty, and markets do not like uncertainty. So that is what's going on with the markets. You have a lot of people selling because of that. On top of that, I personally think this is all more tied to what's happening in Europe. What's happening in Europe is we have right now uncertainty about Spain and Italy. If those two countries were to default, which I don't at this point think is going to happen, that could affect everything that's happening here in the United States. Now, looking at the S&P downgrade, although significant, what I think it does is it basically threw a shot across our bow to Washington, and by doing that it says, hey guys, you have to get your act together, because it cannot be this whole gridlock fighting against each other and no one coming to any kind of resolution, because the resolution that they just came up with was not nearly significant enough to help us for the future. If you are sitting with longer-term diversified money, I really personally wouldn't panic. I wouldn't sell at these levels. Now, if you're sitting in cash, what I've been advising my clients, select dividend quality paying stocks, because number one, they haven't come down nearly as much as the market. These are the ones that if the market does continually go down, because you're never going to get in at the bottom unless you're extremely lucky, but if that were to happen, you are buying companies that pay dividends, so you're going to be earning income. Let's just say I would be looking at probably dividends paying anywhere between 3, 4, 5, and 6%. And what that does is, as the market goes down, and if you continually go down, you're going to be making money as you wait. And then when the market does turn around, I believe that these are the ones that are going to come up the quickest, and these are the ones that, for the most part, you plus dividends, plus the capital appreciation, you should do quite well in these markets. Okay, let's talk about gold. Gold being where it is today at all-time highs. Why? A lot of it has to do with it's the safe haven, or the reason it is it's the safe haven, and everything that's happening with Europe and our downgrade, it's all the money is flowing into gold. I do believe that if the markets do settle and the market does get more clarity as to what's going on, gold from these levels could have some kind of pullbacks, but nothing significant. Having gold in your portfolio, there's nothing wrong with it. I don't ever recommend it being more than, let's say, 15 or 20% of your portfolio, but if you do like gold and you want some sort of hedge, gold would be an excellent safe haven, if you will, until things start to settle. However, you are buying these at the all-time high, so these are things that you need to talk to your advisor about, maybe pick points. You don't have to put all of it in. Maybe buy some at certain levels as you move down in the market. Do I think we can get our AAA rating back? And I believe that, yes, without a doubt, we can get our AAA rating back. In order for this all to happen, government's going to have to come together, make very tough decisions, and they're going to have to cut spending. They're not going to actually be able to borrow as much, and they're going to have to actually cut the spending to get our balanced budget.